Hello, this is Patrick White from Commodities and Investments with your Sunday night, August 18th market recap here. We're going to go ahead and get it started for the week, guys. We got corn down 5 cents here. We've got soybeans down 5.5 cents on November at 8.74 1/4, and we've got December Chicago wheat down 4 1/4 cents at 4.73 1/4. Before I get started here, we're just going to show you the disclaimer here. Just remember that everything I say is not a direct trade recommendation. It's just my opinion. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we're lower on the overnight. We had some beneficial rainfall here for most of the Midwest. Just these dry areas of the eastern half of Iowa in here, and then central to the northern third of Illinois. They were getting dry in there, and we had some beneficial rainfalls of 1 to 2 inches there. So some pretty good rainfall here on the overnight, and that's why we ended up gapping lower, down about 5 cents here on soybeans and down 3 to 5 cents here on corn. So, we did end up going up and filling that gap there on the soybeans there. And, I think it's just, we're trading the weather market here. We had a nice bounce on Friday with some good, short covering action. It looked the most positive for the corn market. They got their nice close near the highs, but, kind of reversing the action here tonight. So going on into the charts, taking a look at the corn market, like I said, we had a really good day on Friday there. We were up we're up about 9 3/4 cents here on December. So, we ended up finding a short-term bottom, at least here at 370 in the corn market. And we rallied up to the 381. That was a light resistance level. I'd look for, 385 to 387 to be our next resistance level. But, we did gap down. So, and I am recommending buying in the overnight tonight, as far as Monday goes. And what you don't want to see, if you want to be long right here, what you don't want to see is you don't want to see a close below this 369 low that we put in on the 15th of August there. If we break that, we're probably headed down to this 363 3/4 contract low there. So I've got that area in red there. And a little bit interesting just to kind of throw this out there. If you look at a 60-minute chart, essentially, we went down and we tested that 370 low, tried to break it and flushed out of there. And if you look, we've got a pretty decent size, resistance level at 374 to 375. And if you look, we tested that 1, 2, 3 different times before we broke out of it. And we're likely about to test the 374, 375 level here within a couple of hours. And we'll see what happens there. But I think that, if we can hold that level, and rally from there, I think we could go on up to, 387 or so. And I think that there's a lot of eyes on the gap at 392 3/4 in December, but also there's definitely a lot of eyes down there at 363 3/4. So just lightly bullish, and the price action is lightly bullish at this time as well. Kind of the same story in the soybean market here. I was watching November soybeans. Really we had a nice push up here earlier in the week, but we failed on that. And really just the push up was on the U.S. backing off of their tariffs. They were going to delay those tariffs that were supposed to go on September 1st to December 15th. And so that had the market, rallying up as much as 17 cents here on the 13th of August there. But since we've fallen back, and really we've just been fighting on the intraday level, that 880 resistance mark. And you can see this on Friday during the 8:30 to 9:30 hour. We rallied up and tested 880. We got up to 880 3/4. We fell off of there. Tested it again from 10:30 to 11:30. Could not get above it. Tested again going into the close. Sold off above it. We got to 880 1/2. And as you can see here, we gapped lower on the overnight. We filled that gap, and now they're taking back their early gains. So I think that there's an 873 to 875 support level in here. I think there's definitely an 880. There's definitely a seller up there at 880 in November beans. And I think if either of those breaks, we're probably headed in a further direction. So if we have 880 breakout here, I would expect us to get back up and test these old highs of 893. If we have the 875 to 873 level break, we could probably head down to 863, down into the 860s there in Nova beans. So something to keep an eye on there, definitely at a critical level. Speaking of critical levels, we've got East Chicago wheat at a decently critical level here. It looks like we're going to test the 470 level here on the overnight. And if they take out 470, there's not a whole lot of great support in here. I guess 460 would be your next area, 461. And if we break down past that, I would expect this 455 to 453 level. I would prefer that, the 455, 453 level, if we do break out of the 470 level. With that being said, though, if we do break out above the 484 level, I would expect a test back on up near the $4.99 to $5 mark. So something to keep an eye on there. That 470 level looks pretty key in the December contract. So going on into the softs, added cotton to the newsletter here recently. And yeah, I guess this last week we had a good push up to resistance there at the $60 mark in the December cotton contract. We're a little bit lower here, just on the overnight. And yeah, the cotton market really, it's been dry in the panhandle of Texas, and they really didn't get a lot of rain here over the weekend. There were some areas that got up to 2 inches of rain, but really sparse coverage there. And just for the non-irrigated cotton down there in the panhandle of Texas, down by Amarillo and stuff, it's getting pretty dry for them. So with that being said, we are in a pronounced downtrend. If you take a look at this thing, we are in a very, very pronounced downtrend. All we've done is sold off since the spring. With that being said, though, we do have a lot of shorts in the market. They could really feel a lot of pain and start to short cover here if the Texas deal, really comes to fruition. But we'll see what happens there. It was good to see the nice, strong close up into that $60 mark here going into Friday. If we do get a close above the $60 mark with conviction, we should be headed up to the 62.66 level or 62.50. We should challenge that area there. And with that being said, though, too, if you're long cotton, you don't want to see it close below the $58 mark. So we'll see what happens there, if they can break out of the range or not. Going on into the hog market here, we had a pretty dismal Friday there. This is as well the October hog contract. Really, we've been in this range between 68.70 and 64.50. Well, we broke that range to the downside there on Friday. Initially, I had support at 62, but it looks like we're going to be supporting, or at least looking at the $61.50 mark here going into Monday. So we'll see if we can hold this low. This low was on August 5th. It was when the when the Chinese announced they weren't going to import any more goods from the U.S. So we'll see if the $81.50 mark can hold, or the $61.50 mark can hold. If that doesn't hold, we can definitely go down to the $59.50 mark and run some stops there. I'm sure there's some down there. So with that being said, this is the October live cattle contract, and as you can see, we've continued to sell off, although, obviously, like the initial shock is out of this market at this time. We're just kind of drifting lower here. We did find some support at $98. I like the $96 level mark, or the $96 mark better in the October contract. We'll see what happens this week. Hopefully they can hold this $98 mark. I would think there'd be resistance at 101. And I guess my first level of real strong support, or real strong resistance, is this 103.42, 103.50 or so, and that lines up with these two lows from early June and late June. So that's about all I got here tonight. If you guys have any questions, feel free to call the office, 712-262-7606, or visit us at aa-commodities.com. Thank you.